Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Monday, January 9th, 2023. It is 10:37 Eastern Time as I'm starting the video, so a little over an hour into the trading day. And what I'll do here is definitely want to go over the equity markets. Been hyper-focused there lately. Time permitting, I'll hit on some of the other recently highlighted trade ideas. If I can't cover it in this video, I'll end it at the broad markets and then go into do a separate video. I want to cover gold, silver, the dollar. The U.S. dollar has reached that pullback target, the uptrend line, the U.S. dollar index. We'll talk about that. Nat gas is ripping. I got to post out to you today on that. Let me just start out here with equity markets. We'll see how I do on time. All right, the kind of recap, and again, some of this may be repetitive. There's always people coming in, checking in on the site from time to time, so I'll go over the same things, the most important things, that is. And that is we had the purple box. I called it the Christmas trading range. It was really mid-December all the way through just last week. And then we had a breakout above that, hit the top of the larger range because we had a reaction there, and then gapped above it today, and we haven't looked back yet. So, as I said, this is energy building like a coiled spring when you get these trading ranges. So as expected, the breakout was to the upside, and as expected, it's impulsive. It's not just kind of meandering on up. This is strong buying, high volume sense. And again, it was all set up in the charts, a divergent low. In fact, this breakout, this is a 60-minute chart of QQQ. This comes all the way back to right here. That's when I first gave you the setup, December 29th. We broke out. There was our buy signal right there, and the next buy signal would come on a break set at the time above 267.50-ish. And so nothing's changed. I still maintain it. All that's changed since then is go back to that QQQ chart. There was the breakout on December 29th as highlighted. We pulled back, we made a lower low, we stayed within the trading range, and the fact that we've broken out now above the trading range greatly increases the odds of a move up here. Now we do have, I think CPI is coming out this week. We'll always have some economic data every week that has a potential to turn things around. But as of now, from a purely technical perspective, and I said it the other day, trade the charts. Don't tune out all the noise. If you're new to trading, new to investing, or even if you've been doing it for a long time, but realize that we've been in a super bull market a la the Fed and easy money for over a decade now, well over a decade, 14 years of it almost. And so at that point in time, good news was often good news, bad news was also shrugged off, and now we are in a completely different market. We are in a stock traders market. We have been since the bear market started, the beginning of last year, and I think we'll continue to be. And so as such, where I'm going with that, not to go off on too much of a tangent, your head will spin if you can't, or you try to get a grip on, my gosh, all these layoffs being announced lately, and everybody's saying we're going to go into recession, and now it's a matter of how, not if we're going into one, but how bad it's going to be, blah 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 blah. And again, the news is going to ebb and flow. And ultimately fundamentals do play out in the long run, but you'll go broke trying to trade fundamentals or trying to trade headlines, because by the time you read about it, it's usually already priced into the market, whatever that is, good news, bad news. All right, so that's that. We'll see where we go. I'm going to give again an update. Here's a little reaction high right here on QQQ, and then of course we have the next target here. That's certainly a level that we could get a reaction. I think we will. We're stretched right now. Let me go over a couple things here on QQQ that I want to show you here. I think it was the 5-minute chart. Yes, it was. I gave you this last week. I showed you this bull flag continuation pattern, and I gave you a measured target. That was this line. Measured target is 270, or was 272.61 roughly, and that's simply taking the distance, or draw a trend line from the length of the flagpole up to the top of the flag, add that to the bottom. And so what I'm getting at here is we have now met and slightly exceeded the measured target. In doing so, also we have some 5-minute small, but small enough for a pullback divergences. And I showed you earlier this morning we were at the first resistance level. We took that out. or right here. And now I think this will probably be a momentum fueled overshoot. So a little pullback, just like I was looking for on Friday before the close, which we got. That's all I was looking for, and got that little 0.5% pullback there in the futures or QQQ. I was trading NQs, but that's it. So a pretty equally impulsive move up and out of that flag. And again, we've exceeded the measured target. There's QQQ. Less active swing trader. Don't even, right now you have nothing but a powerful buy signal last week on Friday, and then even better today on the breakout above the yellow range. So, there's always going to be pullbacks in any uptrend. But as of now, as I said before, the odds are significantly increased from where they were back here when I first laid out the 280 target. The fact that we've now broken out of that range, the odds go up substantially. So we'll see. Anyways, takes trail stops up, raise your stops to protect profits, whatever your trading plan is. And also remember, there could be more than just that 280 target. I'm going to go over that in a second. So I think at this point I'm going to stick to the equity markets in this video, and I'll do the other stuff next because I do want to go through these sectors. There were some other potential bullish developments I covered last week, and those have now mostly come to fruition. There's the double bottom / divergent low. What that means is you take the divergence we had at DL1, divergent low 1, which was back here, and that gave us that rally up to the first target. Again, that was back before the here, I'll show you. I resequenced these targets from that original post. That was right here, also on December 29th, just like that QQQ post I showed you. This was the 60-minute chart at NQ. You had that beautiful bullish falling wedge down to support right there. You can see previous reaction low right here, breakout. We were at the first resistance, and there were the targets, which again have been resequenced since. But let me go back to where we were, NQ. And that's it. So that was, here was the wedge on December 29th right there. Same one I pointed out, breakout. And again, I just added a couple more levels. We hit that first target, pulled back, and put in not just a larger divergent low, but also a successful double bottom, 2 equal lows right there. And then boom, popped out of the larger trading range. And so the way it works is that increases the odds that we're going to go on and hit those other targets. I would say if you're trading NQ, the level here is not as clean as it is on QQQ, so you want to keep an eye on that QQQ chart. That's where at this point in time could likely be the end point of the rally. That's my current thought process, but I'm very much open to it. Just being the first level, we get a tradable pullback if and when we get there. So you can see the next target here, T3. We're right now halfway between T2 and T3. T3 is 11,409 in NASDAQ 100 futures. I could probably pull that line down a hair too. I'm going to do that now just because we have these reaction highs right here. So make that 11,395 or so. So we're getting very, very close to that one. What else I want to show you? Oh yeah, sectors. So let's go to QQQ. Let's now jump out to a daily chart. So these PPO, I'll tell you what, these PPO crossovers have just done us very well trading. I've been highlighting the last time was back here in QQQ and SPY and all 11 sectors of the S&P 500. Told you we were looking like likely bearish PPO crossovers. That's the PPO line down here. I've covered this many times. Here I'll flatten out the get rid of the RSI for a second. That's when the lines cross over. And of course the histogram tells you when these lines right here cross, make a bullish or bearish crossover. And so we got it back there, and then we had the 11 sectors of the S&P 500. We had a lot of confirmation, and we actually, the last objective short I highlighted was right here. It doesn't show it was in pre-market. It was a beautiful short. We wrote it down to the bottom. At least I did. I told you what I did. I was going to stay short, and then just last week I told you I decided to cover all my, swing short positions, trend shorts down here at the bottom of the trading range, and go long for the reasons I've stated repeatedly in the last few sessions. And now here's what I want to show you. I talked about this last week. These pending and likely, what I said appear to be imminent, bullish PPO crossovers. The day is still young, but it would take a big reversal to undo this. That's a check mark. That is a bullish crossover on the daily PPO of QQQ. And again, this is just, you can go back and look at it yourself. It's just a great trend indicator for swing traders. And I always say this, I don't use it as a standalone buy and sell signal. It just helps to confirm it that now we've had a trend change. Therefore, we may see more than just that 5 or whatever percent bounce in QQQ. Let's go through the other indexes real quick and the sectors, and I think we'll wrap it up there. S&P 500, here's our recent trading range right there. Boom. We broke out on Friday. But close a little bit above it, but today's a clear breakout. I highlighted this morning we're at 390.33. It was resistance, and look at that, we powered right on through there. So again, this is or was energy building like a coiled spring. It was gunpowder, a powder keg just waiting for the spark, and the spark is the breakout, so that can carry us up at least probably another run back to the 200 days, and we'll probably from the looks of this, we could have enough momentum to go through there. Remember, big resistance is going to be these downtrend lines, and these all come in together. I'm talking about the primary bear market downtrend lines off the all-time highs. So this is going to roughly align with that 280 bounce target I have in QQQ. So we'll ride it up. We got a little more upside. Probably get a reaction, and if we bust through there, then you're going to see a lot of stops get hit on the shorts and a lot of longs come in, so we could give us another leg up. The bear market really, this is where the bear market starts to get called into question if we take out 428.64, and QQQ's got plenty of room to go as well. Here's your previous reaction highs right here, then you have one over there. So anyways, there's a confluence of resistance overhead. We'll see. Let's take it one day at a time. All right, back to the bullish and bullish crossovers in the PPO. So I showed you QQQ a second ago. There's SPY, S&P 500, check. And then I'm just going to rifle through the 11 sectors of the S&P 500. And again, just focusing on this one trend indicator, because like I said, the more sectors that you get that crossover, the more likely it is to stick and not be a whipsaw. So there's one first largest sector in the S&P 500 as of now. Hopefully you can see it in the video. There is a green bar on the histogram, meaning the lines have made a bullish crossover. So if we close the day anywhere where we are now or higher, roughly, maybe even a little lower, you've got that on the daily time frame. It'll be confirmed. XLV, getting there, but not yet. Again, one of my least favorite sectors on the long side right now. XLF solid. This is day 4, so clean 100% buy signal there from the PPO again. XLY consumer discretionary, solid crossover. So that's, what is that, 1, 2, 3 out of 4 so far. The top sectors in the S&P 500. Industrials gave us a bullish crossover on Friday with confirmation today. XLC, 4 green bars, we crossed over last week and still well above. XLP is very close, negative 0.02, so a little more upside in XLP, which is likely this week, and then you'll get a bullish crossover. You can see again, look at these sectors. It's just a great indicator. There's your bullish crossover, so get long and strong. Bearish crossover right there, get short, ride it out, cover your shorts, and go long here. Sell your longs and go short right here. Take that trend, and if we get that, then there's your long signal. So a few more. XLE still green. XLU utilities not there yet, but very, very close. Looks like a crossover likely. And XLB got a bullish crossover today as well. And the last of the 11 sectors, XLRE or real estate, we got the bullish crossover on Friday with confirmation today. So that's about as good as it gets right there. Most of the sectors have now triggered the bullish crossovers on the daily chart. Just a couple more things. We'll run through the market leaders real quick. Those are some of my favorites right now. I told you I favored tech and the small caps, so NASDAQ 100 and Russell 2000. but also the big cap names, and they're top weighted in the S&P 500 as well. So I expect the S&P to certainly do well if Apple, Facebook, Amazon. There's an uptrend line here. I'm on the daily chart on QQQ, an uptrend line which was broken and is now being backtested. So a lot of resistance as I'm doing this video. Again, likely pullback coming here, and then buy the dip if you are an active trader. You can see, plenty of support. I gave you some levels before. There's support if you get a pullback to around just above 269.30 or so. That looks good there. Or you can trade off the 60-minute chart. Any pullback to 270 would be a very objective buying opportunity. I can't promise you it sticks, but I can promise you if we have that deep of a pullback, that would be an objective entry. The maximum at this point I really want to see is 267.36. I'd rather not see it, but would be a buyer of it. And then anything again much below that, like I said, if this point the Qs have no business getting back down past the midpoint of that trading range. And they're far enough from it that you're probably not going to get a full back test of the Xmas range, the Christmas range, the purple one. Maybe a back test of the yellow range. But here's what I wanted to show you. Market leaders. Apple. And these, again, were just beautiful charts. For a bullish setup. That was a textbook bullish falling wedge pattern. Complete with the requisite positive divergences that I like to see. You had very nice resistance at 130.42. You scroll back a little and you can see that was your previous reaction low. And again, this is Apple. This is the largest component of the S&P, of the NASDAQ 100. And so if you missed the breakout, which failed at that resistance level, you had an opportunity as highlighted at the time for a back test. And so if you took Apple, I mentioned that as being one of my favorites, 7% so far, and little minor resistance there, but that's all it is minor resistance. My first target is, or next target beyond the 130.42 is that 134.61, and that's pretty good resistance. You can see 1, 2, 3 reactions there. We have 4. We consolidated around it right there, and there's a gap on it right there to make that 5. I consider that even though technically not a reaction, a gap on through there, but a gap is a resistance level. So pretty good resistance there on Apple, where you'll probably see some profit taken. And same story. If you missed it or you bought it but you didn't have a full allotment, any pullback to 130.42 or just above that level would be an objective buy point. And then target, of course. I think I've covered this before. I'm just going to go over this because I shared Apple as a trade idea. Downtrend line right there. Beautiful target. And just a near-term target too. So if you took that back test, that's going to give you, 13, whatever that is, percent. I need to extend that trend line, which I'll do here. Edit, extend right, and measure that out for you again. On the back test, depending if and when it's hit, let's just say it comes in around right here, about 12%. And not bad for a swing trade if we get that. Microsoft, again, 60-minute divergent low, and also on the daily chart you can see we had some support there. It was minor support, and we've recovered that now. Again, this was not one of my favorite. I made that clear. In fact, it was one of my least favorite. The ones I liked best were Apple, Tesla, and Amazon. Here's Alphabet. Again, not one of my favorites here, but you can see right here, like on a lot of these, look at the bullish PPO crossover in play right there. And the last time you had a bullish PPO crossover was right here. The time before that was right here. And these are bear market rallies, and this is what you want to get. Some of these are bigger than others, and there was a one before that. So without any exceptions, 1, you got that rally. 2, you got that rally. 3, you got that rally. And now 4. So that's it. No guarantees. We can come out with a hot CPI number that sends the market reeling because they were worried about more Fed hikes or anything. But all you can do, like I said, is just trade the charts. If you get a whipsaw and everything starts going down, they start taking out these previous lows, well, that's going to be bearish. And we could have a quick flush down and finally get that last leg down in the it won't be the ultimate leg down, but my final near-term bottom in the stock market if we get that other flush out. Right now, that's not my scenario, but again, I'll be flexible. I flip on a dime. You guys know that. Amazon, again, one of my top picks. because this level was $83 is very long-term support on the weekly. You don't see it here, but I covered that quite a bit. You can just check the recent videos. And so we had, you can see the way I have it drawn here on the daily. You had this downtrend line right there that comes in with 1, 2, and then several reactions there, call that 3, and a breakout today. Also a breakout above that 87.65 resistance. And you also had this bullish falling wedge here that broke out last week. And then you can go down to the 60-minute chart and you can see same thing, nice positive divergence, and there's a downtrend line in which to target if you are long Amazon. And that's still, from where we're at right now, about another 10% from where we're trading today. If we get up there 9, 10%. And then I'll cover NVIDIA because it is a big component of the NASDAQ 100. You have positive divergence, or almost what I call an ADL, almost divergent low, almost an equal low with the indicators clearly making higher lows. And so NVIDIA is running as well. And also, held this. So I'm going to move that support line down, catch those recent lows. But it's coming up on resistance. So yeah, that's the thing. I wouldn't be buying right now. In fact, I've reversed right before the video because I think we're going to get a little pullback here, and then get back long on the pullback. I'll show you where, right here, right back here, just about that 11,175-ish level right there. That's probably where we'll pull back to and then get another thrust up. Last but not least, because I highlighted that as a top pick too, is Tesla. What Tesla did here, it had support here. I had to roll back, see all the way here, about 109.73. We danced on it, successfully held it 1, 2, 3, 4, 5 attempts. And then this is what is very bullish. The fact we broke it on Friday. And you might say, Randy, no, that's bearish when you break support. At that time it was, but then the recovery itself is very bullish because that gives you a bear trap. The short sellers piled in on Friday when they saw that support level get taken out, and a lot of weak-handed longs were most likely flushed out. Tesla hit a new 52-week low. People can only take so much pain, and then the fact you recovered it. Now, look, I've seen what false breakdowns or bear traps like that happen, and then all of a sudden you do that. At this point, we have no business taking out the low, so it's simple. Like I said it last week, if you took it in here, anywhere in here, and this is where I started buying it, give it a little room. You got to give your stops a little room in this market. You almost have to. When I take a trade, particularly certain ones you can look at, you almost have to expect the false breakdowns. The market makers, the algos, the nefarious forces on Wall Street, that's what they do. They run it down. They take your shares. If you were bullish here, bought it here, they clear those stops on the selling, and they turn around and they go long. That's the nature of this game. So you almost have to anticipate that, and that's why you give it a little bit of room. Now we're at resistance right there. Here, let me go to 60-minute chart. This is also a beautiful bullish falling wedge that's highlighted last week on Tesla. There's your downtrend line. There's your divergence line that forms a wedge, strong positive divergence. We popped above both the trend line. That was on Friday. We got the breakout on Friday. And then today we popped above that 114.62 resistance, and we ran right into my first target there, 122.62 today. So, if you took it anywhere in here, it's a pretty good move so far, about 14. Again, I'm just taking a midpoint here. That's where I took it, was somewhere up here first. But I added to it. But either way, that's 122.56 is about roughly 10 to 15%, depending on where you took it. And, once we clear that level with conviction, ideally on a pullback, they'll offset some, reset the near-term overbought, very, very near-term. We're not overbought on this time frame. We're overbought on the 5-minute charts, short-term charts. If you get a pullback, again, that would be anywhere close to 114.62, or even, I don't think it'll get that far. You probably maybe a gap test to the top of today's gap, and then that should open the door for a move up to that next target there at 136.34. If so, from Friday's lows, that's going to be a run of about 34%. Okay, as promised, I'll wrap it up here. So as of now, everything looks good, and if anything changes, and that's what this market can and often does, I'll let you know. But as of now, this the breakout of these trading ranges should carry us higher, at least through this week and maybe into the coming weeks, and possibly more. We'll see. Again, charts are dynamic; they change every day, minute by minute, day by day, and so will not my analysis. So right now, let's just focus on the near term, and then we'll, if and when we get up to these targets, if it looks like we're going to get some more, I'll let you know. And if something happens and we reverse, again, I'll give you my thoughts as soon as possible, whether I think it's a buying opportunity or, hey, maybe that's it. We milked a little bear market rally, time to get back short. As of now, still looking for more upside and no shorts, at least not on anything stock market related. All right, this has been Randy Finney with the right side of the chart. I will wrap it up here and then get updates out in natural gas, crypto. Still remember, crypto is a risk-on asset, and so that should continue to run with the stock market as long as it does. And then any other commodities that stand out, I'll get to those as well.